Chinese stocks hit 11-week lows after US President Donald Trump said China, quote, broke the deal. This ahead of further trade negotiations between China and the US. Meanwhile, Beijing said that if the US increases tariffs on China, it will carry out, quote, necessary countermeasures. Joining me to discuss is Brock Silvers, Managing Director at Kaiyuan Capital. Brock, good to see you again. It felt as though we were so close to a deal before this week when Trump said he planned to increase tariffs potentially. So what degree of optimism do you have when it comes to the next trade talks this week?
I'm not so optimistic for the trade talks this week. Look, we ran into turbulence this week for a couple of possible reasons. As we reached the end of negotiations, perhaps Team China wanted to reach out and grab a few easy victories at the end, and they overreached. Okay, that sort of gamesmanship wouldn't surprise, but I think more likely is just that Team China was not fully unified, and someone or some group within Team China was having a hard time accepting the difficult concessions made by Liu He in previous negotiations. So they put an abrupt halt to that, and Donald Trump simply wasn't prepared to accept their new positions. So given that, Donald Trump made a very clear statement. I have a hard time thinking he won't be ready to implement tariff increases tomorrow. But on the other side, China would find it politically unpalatable to a high degree to be seen to cave into that sort of statement from President Trump after one day without a lot of time to finesse the issues. So I think there's a very high likelihood that tomorrow we'll see an increase in tariffs.
So where do you think those key sticking points really lie between the two sides?
Well, previously, it had all really been about enforcement mechanisms. And as those issues were chipped away at, what the problem seems to be now is that China had been promising to incorporate its agreements into Chinese law, and now it's not going to do that or doesn't want to do that. And from the U.S. perspective, China has just proven over time to be somewhat slippery in terms of these agreements, and the U.S. wants to tie this down legally. And that seems to be the big sticking point. But China must have known when it made those requests that was going to be very difficult to get past the U.S. So I think they might have known what they were doing with this last draft.
So with Trump threatening fresh tariffs, saying rhetoric like the deal is broken, is this a negotiating tactic from the US, or is the deal sincerely damaged?
Well, I think we still have a small chance to get an agreement quickly. But if it doesn't happen quickly, it might not happen over the medium term either. Because, as I said, I think tomorrow the odds of Trump being willing to raise tariffs is very strong, and the odds of Xi being willing to completely back down in the face of that also remains quite a long shot. Once the tariffs go up, that complicates everything, and then China has to worry about its own political situation and should it offer countermeasures and so on. So things will become more complex, and it might, if it doesn't happen soon, it might not happen for a bit. Maybe we need to buckle in and get ready for a longer, protracted discussion.
So in the context of those renewed trade tensions, potential increases in tariffs, do you think we're likely to see further support from the Beijing authorities in order to shore up support for its economies and markets? And what might that look like?
Well, look, in the first quarter, Beijing implemented stimulus equal to almost 10% of GDP. That's just a massive, massive stimulus. And it can't keep that up forever. And in the second quarter, that's already begun to taper off, which leaves me and a lot of other analysts thinking that the odds of a slowdown returning in the second half of the year seem pretty reasonable. So Beijing may be feeling some economic tailwinds right now, and that maybe made it easier to make some demands in trade talks. But I don't think those tailwinds might not last throughout the year.
So where do you think that economic impact in terms of the tariffs is being felt hardest, both in China and the US? And also, which side do you think has been hit worse?
Well, the U.S., I think, has a much stronger position. You know, the U.S. economy continues to amaze people by just doing wildly. It's wildly successful at this point, and it has been for such a long time. I think China may have been banking on a bit of a rollback, but that hasn't happened. Now, from the Chinese perspective, a few months ago, they were much more worried about the economy, and that worry has sort of dissipated a bit, but I think there's a good chance it will return over the course of the year. China's economy has a number of problematic areas that are not driven by tariffs and are not driven by Donald Trump's decisions, but those tariffs and those decisions are unnecessarily exacerbating an already sort of tricky situation. So I think Beijing should be quite anxious to get this behind them if they can in any sort of palatable way.
All right, let's talk about the markets now, because Chinese stocks obviously at 11-week lows. We've seen a pullback in terms of foreign buyers as well into the Chinese stock market. So where do you see the mainland equity market heading into the second half of this year?
Well, I was always a bit suspect of the first quarter rally, which I thought was really being driven by a combination of unbelievably massive stimulus combined with unfounded optimism on trade talks. Well, now the optimism is no longer sort of operative. We have a new reality that's been shown to the market, and the market was shocked, and it did not like the shock. And that's why we've seen market turbulence in equities. That will continue, I think, for as long as there is no deal. You know, China is still sort of an export economy, but it will also be exacerbated itself if in the second half of the year we see a return to a slowdown driven by kind of weak Chinese domestic demand.
And when it comes to the Chinese yuan, we've seen a rise in bearish bets as well. We're at the lowest level since January now. Do you think we're likely to see further downside for the renminbi? And in terms of USD CNH, do you think that 7 handle continues to be the key level to watch?
Well, look, we broke through 6.8 just on, a Donald Trump tweet was all it took to push us past 6.8. With RMB rates, China is a little bit like a man holding himself hostage, threatening to shoot if he doesn't get his way. Chinese yuan weakening would help deal with some new tariffs, but it would also harm the economy in other significant ways. So I'm just not sure that's a real viable option. I think absent an agreement this week in Washington, if Liu returns to Beijing empty-handed, could we touch 6.9? That wouldn't surprise me at all. I still see 7.0 as sitting in a glass case marked break only in case of emergency.
Brock, thank you so much for your time. That was Brock Silvers, Managing Director at Kaiyuan Capital. I'm Victoria Scholar. Thanks for watching IGTV.